For some reason, it's not letting me, so I'm just going to allow you to talk. Peter, how are you?
Can you hear me?
I got you, buddy.
That was some kind words. I appreciate what your guest just said.
Yeah, that's Blake. You have a lot of fans here, Peter. What's the NFP going to be in light of what we just saw from the ADP? What are you thinking?
Well, it's not a good thing to draw a line between ADP and BLS on a monthly basis, but I
Okay.
think that the ADP number was certainly a reminder that there is an issue with the supply of labor. There is not an issue with the demand for them, as seen in the level of job openings. So no doubt that there is now risk to the downside in this number following this report. But again, uh, we've seen plenty of months of offsides between ADP and BLS, so I'm not going to jump to any conclusions just yet.
Okay. Well, then why don't we talk about some of the things that you've been writing on your website, Peter? First of all, it's interesting, I've talked to someone who served in different administrations, and he was on with me about a month ago, and he said that I read your writings that you also believe that Brainerd is going to be the next Fed chairman, and that
Well, the
this
possible next.
possible. Okay,
I still think that Powell has a shot because there's a lot of politicking that's going on behind the scenes here that Powell can easily get reappointed.
yeah, I've heard people say at this stage of this economic recovery wouldn't be such a great idea to change Fed chairmen. Do you have a view on that?
That's a possibility. You also have to deal with the political and personal dynamics between Janet Yellen and Brainerd, if she is it, because they're going to work closely together. Obviously, Yellen has uh, knows what she's getting with Powell, even though she knows what she's getting with Brainerd too, because they were on the committee together. That dynamic is in play here. Uh,
She's a little more progressive, but I mean, Paul has definitely fallen in line with. He
oh,
knows how to be a
they're all the
dud.
same thought, no doubt. So, but
Same
I just think
cloth,
that
right?
yeah, but I just think that they're just also political and personal considerations here as well. So I wouldn't be
Yeah.
surprised if Powell is reappointed, and I wouldn't be surprised if he handed the keys to Brainerd.
Does this remind you of the '70s? Strangest landscape I've seen in a long time, Peter, with job openings and people, not wanting to go back to them, and all the artificial stimulus and payments, entitlements. Delta has reared its head a little bit. Have you ever seen anything like this? Are we in stagflation already? Uh, what do you think?
We are in stagflation, certainly in particular sectors. All you do is look at the housing industry, and that's just the perfect example where you've had house
Yeah,
price inflation being so aggressive that it is now creating sticker shock for a lot of potential buyers, particularly the first time buyer. And that then in turn slows the pace of transactions. Then you throw in also, of course, you have a problem with the supply of product
yeah,
because builders can't find enough lots or find enough materials or labor to build those homes, which then exaggerates the supply constraints, which then further increases prices and therefore turns off potential buyers, particularly that first time buyer. And that first time buyer is a very important piece of the housing chain because when you think about the trade up buyer needs a first time buyer to sell their home to. And if they can't sell that first time buyer, then they're not moving up to a bigger home. So there's a variety of problems that this creates. Then, of course, you shift to the auto sector. Yes, you have a shortage of semis, which then leads to a spike in used car prices, a rise in new cars, and then you reach a point where buyers are saying, "Oh my God, I can't believe I got to pay this for a car," and that slows things down. In the ADP number talked about earlier, you can't get enough workers. That leads to a more elevated level of unemployment. At the same time, you have all these inflation pressures. So it's definitely a form of stagflation, which then just creates an even bigger problem for the Fed because they're not going to know what to respond to. Now we know that they're focused more on the jobs data. So you talked about what are the comparisons to the 70s. Well, Arthur Burns was the chairman of the Fed from 1970 to 1978 or 79 when Volcker came over, and Powell seems pretty intent on being the next Arthur Burns.
Okay. And, that's a lot of things happened. Bretton Woods was the end of that. A lot of things happened in the 70s. I'm wondering if you could explain to me and tell me if there's any significance and if it's isolated with just Wells Fargo about them pulling personal credit lines from people.
I did see that, and I don't know what went into that decision because there are plenty of other banks and other financial institutions where you can get credit lines. So I don't know what the aggregate.
It might be Wells Fargo specific. How about what's happening with the problem of too much liquidity for the banks and all these reverse repos, kind of breaking records with reverse repos and the Fed backstopping some type of money market fund for the banks. Can you explain what the problem is about banks having too much liquidity?
Well, it's just the symptom of the Fed just way overdoing it and shoving reserves down the throats of the banks that then it ends up back at the Fed in reserves. I mean, that's the craziness of QE is that it sort of drugged these central bankers into believing that it's economically stimulative, which is no empirical data whatsoever that it is. So they give banks the cash, they take the bonds off the market, and then basically they shovel the bonds right back out in these reverse repos. I mean, it's just a game of whack-a-mole is what this is. But the problem with debating this and discussing it is that the Fed thinks that QE is economically stimulative, even though it's not, and then they have to deal with all the unintended consequences of this overload of liquidity through these, alphabet soup of different facilities.
Okay, we've had a real. I thought a week or so ago when we put this low in, Peter, if you could see my 10-year yield chart, I thought that might be it, and we're kind of getting a retest here. Any view on yields? We had this real nice move up. To me, it could still just be corrective, this decline in yields. You think we're going for 1% or?
I don't know. I mean, I'm in the belief that inflation is sustainable and persistent, which would obviously be negative for bonds. But on the other hand, a lot of this curve's flattening and the leg down in yields came in the middle of June when the Fed said that they're beginning to talk about tapering. Because when you look at each of the episodes of QE, when it was on, when it was off, when QE was on, the curve steepened. When QE was off, or was tapered, the yield curve flattened. So that's when you started to see the flattening. And then you throw in, of course, Delta variant, and then the growth worries that inflation is now causing, because higher inflation is now causing a slowdown in growth, both in real terms at the GDP level, but also real wages. And obviously, growth slows just naturally if you can't get stuff. So that's why we're seeing the drop in yields. But there is a tug of war between the inflation story on one hand and the growth slowdown we're seeing on the other. The net result is stagflation, and there'll be some days when the long end is going to respond to these higher inflation prints, because we're going to still see a slew of higher inflation prints in the months to come. Because any moderation we see in the pace of goods inflation, which maybe we see in used cars, but I think will be offset by others, is we are about to see in the CPI and PCE data a sharp increase in the pace of rental increases. We're seeing apartment list national report for July, which came out last week, which is showing massive increases in rents. So CPI is showing like 0.2 to 0.3 increases in month-over-month rents. Apartment list is saying they're going up 2% per month, month over month. In fact, their July report said that from June to July, rents went up 2.5% just in the month, and that year to date, rents are up 11.4%. Just
It's
year to
going to be a
date.
revolution, Peter.
So yeah,
I don't
that's
know how
forty
people.
percent
Yeah,
of
go
core
ahead.
CPI. That's 40% of core CPI.
Yeah.
So if you show me a decline in used car prices or softening and a drop in lumber prices, I'll show you rents and I'll show you a 10-year high in the CRB Raw Industrials Index.
Well, if you build some type of wooden bed in your car, you're okay.
Right.
Could live there, right, Peter? I mean, this
So
squeeze on the middle class is unbelievable. I mean, these prices, if you're very affluent, it's like water. Money's like water anyway; it just keeps flowing. But what's going to be the outcome with people being squeezed? I'm trying to remember the '70s. I was having too much fun to remember it, but I was in the business and I remember the win button. Remember that, Peter? Whip inflation now.
yep,
Um,
I was a kid, but
yeah,
yes.
yeah. So I don't know what the button's going to be for this. What do you think of what's happening with this Delta variant? You said we'd be able to go to a concert this summer, and Lollapalooza in Chicago is definitely a big concert. A lot of people, um, next to each other. Uh, do you think the efficacy of these vaccines, which drop sharply after about 6 months, is going to be a problem this fall?
I don't actually. I think we power through this
Okay,
because
cool.
I said for two reasons. Number one, we have no choice. We're
Yeah,
not shutting down again. It's just not happening. And
yeah.
number two,
Okay,
yeah, I do think that they're gonna, while maybe they'll see a lower level of efficacy, it'll still be rather high. And if you look at the data, not anything else,
right.
99% of the people that are being hospitalized haven't been vaccinated.
Okay,
So if you look at those numbers, that's the fact. Also, the faster Delta spreads, the faster we're going to get to some level of herd immunity because you're going to tack that on to people that have already had COVID plus the vaccines. So
okay.
just look at India a few months ago. The
Yeah,
numbers skyrocketed and then came crashing down. Look at the
right.
numbers in the UK; they continue to fall. There
Good
is a
point.
level of herd immunity out there. The problem is not necessarily Europe that has high vaccination rates in the U.S., but it's Asia, where outside of China and maybe Singapore, there's been low levels of vaccination rates, and that's where you're seeing a problem. Now, Japan, I'm sure the next 2 months is going to really ramp up vaccinations, but Thailand, I think only 5% of the people have been vaccinated. COVID's ripping through Indonesia. But on the other hand, again, not to be callous with people getting hurt by this, but there will be. That's one of the benefits of a fast-moving virus is you're going to get to a level of herd immunity or natural immunity much quicker.
Okay. We've seen a little pressure in some of the commodity markets. Once everyone did embracing, the inflation scenario. You have copper coming off. You have more like the economically sensitive commodities, copper and oil. Oil's come off. Do you attribute that to just a little bit of a COVID scare in Asia, taking a little bit off GDP world growth and not
Yeah,
as much demand?
yeah, I believe so. I think definitely Asia will see a slower pace of growth. But on the other hand, uh, I mentioned the CRB Raw Industrials Index traded down yesterday, but Monday's close was at a 10-year high. And the
Okay.
reason why I bring that up and then I like to look at this particular index is because it includes things that aren't traded on futures exchanges, which
You
are
know the
obviously,
symbol of it, Peter?
I mean, on my Bloomberg, it's CRB space RIND. Robert Isaac Nancy David. So it has tallow in it. It has hides. It's got resin. So you're not trading futures on that. Uh, whereas which show that it would better reflect pure supply and demand as opposed to speculator emotion in the copper or oil market.
Okay.
But
So
what's
go
going to
ahead.
keep commodities elevated for a while is just the lack of investment, particularly in energy. I mean, we heard from BP and Royal Dutch and Chevron and Exxon and Conoco over the past week. None of these companies are aggressively investing in the business. They're just basically trying to maintain their current exploration projects, maybe adding small ones here and there. So, yeah, maybe we see a drop off on the demand side, but you are not going to find any major supply increases, certainly in the non-OPEC world, of note. And if anything, shale is going to remain well below its production levels of 2019. So I would be buying any sharp commodity pullback that if we do get it.
You still like metals, right?
I love precious metals. It's been maddeningly frustrating, particularly this year when, while they had a great 2020 with silver up about 40% and gold up 25%, the backdrop has played out pretty well with the inflation story, the drop in real rates to record lows. Now the dollar, of course, is up, so that's been a slight headwind, but the dollar is barely up. You know, the dollar index has gone from 90 to 92. I don't call that much of a rally. So you'd think that with everything going on, gold and silver will be much higher, but they're not. They're down in the year. So it's been a frustrating year being bullish on it, but I remain so. I still think that the bull market is intact, and people are going to realize that not only will the Fed go really slow with this taper, if they even get it off the ground, because you still have plenty of doves out there, but even if it takes them a year, rates are still going to be at zero. And if I'm right on inflation, real yields will still remain deeply negative.
Speaking of bull markets, Peter, is there ever an end to this bull market? S&Ps?
Yeah, I mean, I think it a lot will depend on this inflation story, just because it's something that no one really has any experience with. The 1970s.
So would higher yields be the pin that pops it?
Well, I don't know if it'll be higher yields or it will have to be the Fed's response to it.
Okay.
And yeah, because if the Fed does start to taper because they have no choice, because the inflation stats remain high, then we know, looking back over the last 10 plus years, the stock market doesn't like a tightening. We corrected after QE1. We corrected after QE2. There was a correction. We had the taper tantrum. And then when QE3 was tapering off, we had a correction then. We had a correction in the 2 months following the first rate hike in December 2015. We remember February 2016, we sold off. We had a sell-off when Powell was pushing it with rate hikes in the fourth quarter of 2018. So that's when you have, every correction of note has taken place outside of COVID, of course, has taken place when the Fed has been walking in the other direction. And if the Fed is about to start walking in the other direction, that is a setup for a correction in the markets.
Could it be that easy, though, Peter, that people could just wait for the bell to ring?
Well, look how easy it was on the flip side. Whenever the Fed started easing, it was close your eyes and buy stocks.
Right.
And March 2020 was the perfect example of that last year when the Fed said they're going to start buying corporate bonds in addition to cutting rates to zero and doing massive QE. Well, it was time to buy stocks.
Right.
So, unfortunately, it has been that easy.
I'm just so skeptical about, all you have to do is wait for one thing. But, going back to Marty Zweig, I guess it is a key. And no one's going to change. And, maybe people don't even change right away on that. We get initial market reaction and they say the market could handle it because the Fed has prepared the ground
we always hear that. We always hear, rates are going up because that's a good thing, because that means the economy's getting better. Oh, the Fed's tightening. Oh, that's a good thing because the economy's getting better. Happens every single time, but that is the initial reaction. And then, of course, something breaks and that changes.
Okay. Anything you want to wrap it with, Peter? It's really great to catch up with you.
And
what's the number one thing on your mind?
It's this inflation story. If it has legs and if it is persistent and sustainable, the Fed's going to have a big problem. And as is the economy, because the economy is not set up. The world's economy is not set up for higher inflation of persistence. The world's level of interest rates is not set up for that. Yesterday we closed with $16.5 trillion of negative yielding bonds. That
Right.
is not prepared for persistent inflation. So it all is about inflation and where it goes from here.
Okay, we're going to wrap it on that, and inflation being the key, and not necessarily yields on their own, but the Fed ringing the bell. Thank
Yes.
you so, thank you so much, Peter. Really great to hear your voice and catch up with you. And
Same here. Thanks, Dale.
I encourage people to go to Peter's website. He does have free access to some great research, and you could follow him on Twitter at Boockvar. And I always turn the volume up when you're on CNBC, Peter.
I appreciate that. Thanks so much, Dale.
All right, buddy.
All right,
So
take care.
that's a wrap, everyone. Peter Boockvar. Inflation, inflation, inflation. That's what undoes what's been happening since 2008. So keep an eye out for the bell to ring by the Fed. And looks like Peter also thinks that Brainerd is a possibility for the next Fed chair. And I appreciate everyone paying attention and hanging out with us. That's going to be a wrap. Good hunting the rest of the day. You could join the team in about 17 minutes, 22 minutes for the morning edge. And don't just count your inflation hedges, count your blessings, and we'll see you all tomorrow. Adios.